Hello friends, Section 186 of the Companies Act. That is a loan and investment by company. Loan. I'm expecting 8 marks question. Most probably it will come for 8 marks and 1 mark MCQ, 1 or 2 marks. So it is a very important section from the examination point of view also. Uh, is it tough? Let's see how it works. I will give one example. Let's say Amar Textile Limited is a company engaged in the manufacture of fabrics. The company has investments in the shares of the other body corporates. Let's say Amar Cotton Company. Amar Cotton Company Limited. Seventy percentage of shares in the investor. 70 percentage of shares in Amar Cotton Company Limited, and it has also advanced the loans to other body corporate. It has given loan to other body corporates. The aggregate of all the investments made and the loans granted by Amar Textile Limited exceeds the 60 percentage of its paid up share capital and free reserves. So how much it exceeds? It exceeds given investment here. This is loans. Exceeds the 60 percentage of the paid up capital and the free reserve, and also exceeds 100 percentage of its free reserve. So in case of paid up capital and free reserve, 60 percentage exceeds. Only free reserves, 100 percentage it exceeds. In course of its business requirements, Amar Textile Limited has obtained a term loan from Industrial Development Bank of India, IDBI. Is it IF public financial institution? No, IDBI is recently removed from the public financial institution. So from the IDBI, they obtain the term loan. Term loan. This is still subsisting. That still in effect, still subsisting. Now the company wants to increase its holding from 70 percentage to 80 percentage of the equity share capital in Amar Cotton Limited. So now they want to increase to 80 percentage. They have 70 percentage. They plan to increase from 70 to 80 percentage of the equity share capital in Amar Cotton Limited by purchase of additional 10 percentage shares from the other existing shareholders. So in this case, what is the legal requirements of the Amar Textiles Limited under the provisions of the Act? Whether it is a permissible to grant loan to other body corporate to invest in the Amar Cotton Company Limited, can can it give loans to others exceeding these limits, whatever they provide limits? Is it okay? Whether term loan is taken from the IDBI and given the loan, is it all okay under the provisions of the Act? This is all covered in the section 186. So for that we have to know what is section 186. Let's move on to one more question. So we can understand the what is the objective of the section 186. Let's suppose say one company, Soft and Secure Lenders Limited, this is example 2. Soft and Secure Lenders Limited has convened a board meeting on 25th August 25th not August, let's say October 2016. One of the items agenda is to approve the grant of the loan. Let's say one of the agenda about the approval of the loan. So what is the loan given? Loan given is rupees 20 crores, 20 CR loan is given to Easy Going Industries Limited for expansion of its business activities. As the board meeting, out of the total 6 directors, they have 6 directors. In the board meeting they have total 6 directors. Out of the 6 directors, 5 directors were present. So 5 directors were present, but out of the 5 directors, 4 directors approved. 4 director approved, one is except one not approved. About the loan, 20 crores loans to the Easygoing Industries. So the borrowing company has taken a loan from a public financial institution and also deposit from the public. Public financial institution. Give me one example. UTI, public financial institution. UTI is the one of the example. LIC, IDFC, not a IDBI. Okay, IDFC, Infrastructure Development Finance Corporation, is a public financial institution, but IDBI has been excluded recently. So very important, that can be asked in the examination. What is the effect? We'll see that. So borrowing from the public financial institution and also deposits, that's okay. So you know the case, Softs and Secure Lenders Limited given loan of 20 crores to the Easygoing Industry Limited. They had a board meeting. Out of 6 directors, 5 were present. Out of 5, 4 approved, 1 is not approved. Agenda, this is the agenda. Okay, how it affects in the Companies Act. Is it permissible? Section 186. This is all about the section 186. Let's move on to one more question. Example 3. Example 3. Ask Housing Finance Company Limited. Ask Housing Finance Company Limited. This is a company. Are prepared to give housing loans to the employees housing loan to the employees of MS News Pharmacy Limited, subject to the condition that loans are guaranteed by Miss News Pharmacy Limited. So they are giving loans to the employees. They are giving loans to the employees. Loans are given here, but they want guarantees from the company. News Pharmacy Limited is not a listed company. So this company is not a listed company, and the company will be exceeding the limits prescribed under section 1. So that is first not a listed company, and they are exceeding the limit with regard to the loan. Okay, under the Companies Act, by providing the guarantees. Advise the company about this legal requirements under the Companies Act 2013 to give effect to the proposal. Section 186 provides some limitations with regard to the loan, guarantee, security. They are exceeding that limit, whether they can do so under Companies Act with regard to specifically with regard to the loan to the employees, and they are giving guarantee. What about if they are not giving guarantee, they are giving the security instead of guarantee? They are giving security. At that time what happens? These are the two questions. Okay, we will see the direct provisions. Section 186 of the Companies Act deals with the related to loan and investment. First thing is, it is applicable to the public as well as the private company. That is the first point, and it has some 13 subsection. We'll see that one. Subsection 1, investment by company. Without prejudice to provisions contained in this act, a company shall, unless otherwise prescribed, make investment through not more than 2 layers of the investment. Layers, what is a layers? For example, a company is a holding company and a B is a subsidiary company, and the investment to the B, that is a one layer. Investment by the holding company to the subsidiary will be the one layer. And the company B does not do the other operation than the diverting the money to other channel. That means they are giving, subsidiary company giving to others that money, whatever they receive from the A company, holding company, they are giving, let's suppose example, to C company. So investment flowing from B to C is the second layer. That is all about the layers. First layer, second layer, where the C is the subsidiary of the B, thereby indirectly becoming the step down subsidiary of the A. So these are the layers. So these investment cannot be more than the two layers of the investment companies. Uh, Exemption, however, the provisions of the subsection 1 shall not affect acquiring of a company incorporated outside India. That's okay. A company from acquiring any other company incorporated in a country outside India, if such other company has investment subsidiary beyond two layers as per the laws of such country, that is okay. Other exception is subsidiary from having a investment subsidiary. A subsidiary company from having any investment subsidiary for the purpose of meeting a requirement under any law or under any rule or regulation framed under any law for the time being in force. So that is also okay. Investment subsidiary or a incorporate outside India, that exception is there. That is the subsection 1 of the section 186. The reason for the introducing this section, usually for the it is practice to have shell companies, mostly private company, and they make them hold investment, and they used to get funds from the somewhere, and which will send to another company, and they will downstream it, and at the end consolidation, these shell companies never get into exposed at all at the time of the consolidation. That's why they made more than two layers is not permissible. Okay, that is the section subsection 1 of the section 186. This is very important. Section 2, limitation or a restriction on the company. According to section 186 subsection 2 of the Companies Act 2013, there are three types of transaction: loan, guarantee or security in connection with the loan, acquired by of subscription, purchase or otherwise the securities of any other corporate. Any loan to any person, whether employee includes, no, employee does not include actually. So any loan to any person or other body corporate, any guarantee or provide security in connection with the loan to any other body corporate or a person, acquired by way of subscription, purchase or otherwise a security of any other body corporate, exceeding, no company shall give exceeding 60% of its paid up share capital, free reserves, security premium account, or 100% of its free reserves and securities premium account, whichever is more. So that is what our answer comes. They are given in the first example, they are given more than 60% and more than 100%. So we have, in examination we have to write this much. This section 196 subsection 2 has to be written. Any loan to any person, any guarantee or by way of subscription, purchase or otherwise securities any other body corporate, exceeding, no company shall give exceeding 60% of its share capital, free reserve and securities premium, or 100% of the free reserves and security premiums. Notification is there. Applicability relating to the grant of loan advance by to their employees. It has been clarified that loan or advance made by the companies to their employees other than the managing or whole-time director are not governed by the requirements of section 186 of the Act. That will come under section 185. This clarification will however be applicable if such loans or advances to employees are in accordance with the conditions of service applicable to employees and are also in accordance with the remuneration policy, in case where such policy is required to be formulated. So our third example, part 1 is solved. So loan is given to employees and they given guarantees, so this is allowed under section 186. So for the guarantee, because per employee will not come under the person, loan to any person. What is the subsection 2 tells? No company shall directly or indirectly give any loan to any person or any other body corporate, or give any guarantee or provide security in connection with the loan to any other body corporates or a person, and acquire by way of subscription, purchase, or otherwise the securities of any other body corporate exceeding 60% of its paid up share capital, free reserve, security premium. 60 will come when paid up capital, free reserve, and security premium is there. 100% only for the free reserve and the security premium, whichever is more, except with the prior approval by means of a special resolution passed at the general meeting. If a limit is exceeded, special resolution can be taken and loan can be given. However, explanation provided in section 186 subsection 2 of the Companies Act states that for the purpose of this subsection, the word person does not include any individual who is in the employment of the company. So as per that, this Ask HFC Limited was prepared to give housing loans to the employees of the News Pharmacy Limited on the condition that such loans are guaranteed by the News Pharmacy Limited exceeding the limits prescribed in this Companies Act 2000. Correct. They told they are exceeding the limit. Correct. But here the loans to be guaranteed by the News Pharmacy Limited for its employees, which falls within the purview of the explanation, which includes guarantee given for the employees. So section 186 subsection 2 shall not be applicable to it. The section only does not apply. Exceeding the limit does not come at all. It is irrelevant. Hence it can give the guarantee without any condition on the limits imposed. So there are no legal requirements to be fulfilled under the Companies Act. What about the security guarantees? Or second question, security is asked. See, for the security also same wording is used, guarantee or security. Correct. So answer will be the same. Security also it is allowed, because section 186 subsection 2 is not applicable in this case. Even if the company provides security instead of guarantee, as the provisions of this section 186 subsection 2 are applicable for the providing security also. So this is example 3 solved. It can be interpreted that company can do transaction given in headings 1, 2 or 3 in the diagram up to 60% of paid up capital and free reserves and security premium, or 100% of its free reserves and security premium account, whichever is more, and restriction apply only when such transaction exceeds the limit. If it is exceeds the limit, what happens? SR is applicable. They have to take SR, special resolution, in the general meeting. Prior approval for exceeding the limit. That is the subsection 3. Prior approval by means of special resolution passed at general meeting shall be necessary where the giving any loan or a guarantee or providing any security or the acquisition exceeds the limit specified above. According to the rule 11 of the company's rules, to where a loan or guarantee is given or where security has been provided by company to its wholly owned company or a joint venture company, or acquisition is made by a holding company by way of subscription, purchase, or otherwise of the securities of its wholly owned subsidiary company, shall be the requirement of the subsection 3 of this section 186 shall not apply, provided that the company shall disclose the details of such loans or a guarantee or a security or acquisition in the financial statement as provided under subsection 4 of the company section 196. Okay, for the fully owned subsidiary there is a exemption for a wholly owned subsidiary company. in that case of the loans and the guarantee or security. So we see in section 186(1) that more than two layer is not possible, and the two exceptions are there. Corporate outside India, and the first one, subsidiary from having investment subsidiary. In case of investment subsidiary also, that two layer is not applicable. That is the section 186 subsection 1. What subsection 2, with regard to the loan, security, guarantee, and the purchase and acquisition of security, with this condition will come 60% and the 100%. Free reserve securities premium. Here free reserve plus securities premium, whichever is more. Next comes subsection 3. If these limits are exceeded, then special resolution is required. That is 3. What about the 4? That should be disclosed amount and the investment loan disclosed in the financial statement. That is the 4. And even in the notice of special resolution, you should mention with regard to the limit is exceeded. Next comes 5, section 186. This is very important. This has two parts. Board meeting resolution. This should be unanimous board resolution. Very important. Unanimous board resolution. And in case of loan is subsisting, prior approval from the public financial institution is very much required. So as per section 186 subsection 5, board resolution is required, unanimous board resolution. So when we go back to our example, what happened? Example number 2, 20 crores loan is given to Easygoing, borrowing from the public financial institution. Here 4 director is approved, so this will be violated. Section 186 5, unanimous board resolution is required. That is violated here. Only 4 approved, 1 is not approved. This is the crux of the question. Since the approval for the grant of the loan has not been sanctioned by the passing of unanimous resolution at a meeting of the board with the consent of all the directors present at the meeting, so loan proposal is not in compliance with the Companies Act, because all the director is not approved. So which section has to be written? Section 186 subsection 5. In the first example, their term loan is still subsisting from the IDBI. Whether prior approval taken from the IDBI, is it required? No, because IDBI is not a public financial institution. So that question of section 185 6 subsection 5 will not arise. So in this case, they exceeded the 60 percentage and 100 percentage of free reserve, they wanted to increase the 10 percentage, they can do so after the special resolution that is given under section 186 3. Yes, they can do so after special resolution. In case of this one, term loan, no problem. Next comes subsection 6, that is with regard to the register SEBI, company register on the SEBI section 12. They have certain limits. If that increases, they have to agree with the section 12 limits in case of loans. That is with regard to subsection 6. Next comes subsection 7, section 186 7. This with regard to the interest lower than the interest as a yield of we have 1 year, 3 year, 5 years, 10 years. These are the interest is specified for the government securities. So closest to the loan tenure you have to take. So whether interest is lower than this interest as specified in the government security, they cannot give the loan. But there is amendment, recent amendment, exception is given for 2 section 8 companies and companies whose share is more than 20 percentage or more by the CG or one or more state governments. CG or one or more SG or both, they are holding 26 percentage or more. Same thing with this CG or SG, 26 percentage or more, but they have to file annual returns properly, no default. So in that case they can give lower than the interest specified. That is whatever the government security interest is there for 1 year, 3 year, 5 year, 10 year, closest to loan term. I think this may ask in the MCQ category. Okay, subsection 7 is over. Subsection 8 now. Section 186, this is with regard to the default of the deposit, repayment of the deposit accepted, or it can be interest also, repayment of the interest before the commencement or after the commencement of this act. If there is any default in the repayment of the deposit accepted or in the interest, they cannot give loan, security or a guarantee or acquisition of shares. They cannot do so till the default is there. They cannot do so. Even this is can be MCQ probable question. So next, subsection 9, section 186, Maintaining the register, simple section. Maintaining register with regard to the loan given, guarantee, whatever, they have to maintain the register. That is subsection 9. Moving on to 10, section 186.10. This is with regard, this has 3 points. Register has to be maintained at office, registered office, and open for inspection. And the third point, can extract copies by the members. Of course they have to pay the fees. So this is regard to the section 10. This in this MCQ is possible whether members can take extract copy of the register of the section 186 loans, guarantees, etc. What is in case of what is the penalty in case of contravention? Penalty for company, office in default, officer in default. For company, imprisonment is not possible, of course. 1 lakh to let it be, oh no, 25,000. 25,000 to 5 lakh. Here fine is for an officer 25k to 1k. Of course imprisonment is also is there up to 2 years. Okay, that is with regard to penalty. Penalty is section 13, subsection 13, section 186 subsection 13. What about the 11, section 11? That also very important section. Section, when I say section 11, 186 subsection 11, that is a no section not applicable. Not applicable, of course, except section 186 subsection 1. This is not there. Section is not applicable for the, we can divide two things, loans, guarantees, and the securities, and the acquisition, two parts. We have four points under acquisition. We'll see that loans and guaranteed securities section is not applicable for the banking company. Banking company, of course, their business only doing that. So section 186 is not applicable for the housing financing company, housing finance company, insurance company, So this ordinary, in the ordinary course business, they have should be the ordinary course business. And one more point is finance company. There should be, again, ordinary course should be the ordinary course of business is financing. For these loans, guarantees, securities, with regard to section 186, not applicable. What about the acquisition? Acquisition, this is not applicable to the NBFC or principal business itself, acquisition of shares. For such company, principal business itself acquisition, for that also not applicable. NBFC, principal business for itself is acquisition company. Then shares allotment under section 62(1), A. Then the again these companies, banking company, housing finance company, insurance company, their acquisition is made in the ordinary course of business. Ordinary course of business acquisition is made. So again this is a very important section, probable in MCQ question also. Rules are also is there with regard to section 196, or you can say with regard to the loans. I said for a wholly owned company, wholly owned subsidiary company, SR is not required. That is section 186 subsection 3. That is not required. And the register must be maintained. Of course, we have the section also, section 186. Is it 9 or 6? Maintain register, subsection 9. Maintain the register. What about the rules? That should be maintained in the MBP2, form MBP2. MBP2 must be preserved. Of course, preservation comes within 7 days of the transaction. They have to give chronological order should be maintained, preserved by the authority, prescribed authority, mainly company secretary or a authorized person. Preserved. Then it electronic or manual or electronic. For copies they have to collect fees, correct, for extraction of the copies. Should not be more than 10 rupees for each copy. So this is the with regard to the register. And the wholly owned subsidiary company, no need of section 196 subsection 3. That is, if the exceeds limit, special resolution is not required. There is a rule, company rules, restriction on number of layers. Restriction on number of layers. Company rules 2017. No company shall have, except sub special mentioned in the sub rule 2. Okay, except that one, no company that is specified should have more than 2 layers. Should not have more than 2 layers, except for the wholly owned company. Wholly owned company can have, or in the case of acquisition of company acquired, incorporated outside India. Company incorporated, acquisition of company incorporated outside India, except for these two, no more than 2 layers of investments or loans. This rule is not applicable to, of course, banking company, insurance company, or NBFC, government company. So these layer rule is not applicable to banking company, insurance company, NBFC, government company. One more thing, this rule is not in derogation. No, it is not in derogation or exempt or relaxation with the proviso to First we see section 196 subsection 1. We see in company rules, first point with regard to the more than two layer and the exemption. Then we see in section rule not applicable. Then we see in with regard to the section 186 subsection 1. Then we will move on to very important, this is every company, fourth point under rule, fourth point, fourth rule, every company other than the company referred in company sub rule 2 existing on or before commencement of those rules, which has a number of layers of subsidiaries in excess of layers specified. So any company has excess of the layers specified under rule 1, right? Shall file with the registrar a return disclosing details of specified therein within period of, so they have to disclose the details. Time is given within period of 150 days from the date of publication of these rules. Whatever these rules came to within 150 days from the publication of in the official gazette, these rules, 2017 rules. Then the not after the date of the commencement of these rules have any additional layer of subsidiaries over and above layers existing on such day. If the after this rule came into, if any layer is there more than the specified, they have to be informed or disclosed to the registrar. Not in case one or more layers are reduced by its subsequent to commencement of these rules have number of layers beyond number of layers it has after such reduction or maximum layers allowed in the sub rule 1, whichever is more. That is okay. Last point is if any company contravenes any provision of these rules, companies and every officer in default shall be punishable with a fine which may extend to 10,000 with regard to contravention of the rules. Fine may extend to rupees 10,000, and where a contravention is a continuing one with the further fine which may extend to rupees 1,000 per every day after the first, during which the contravention continues. And at last, this section is not applicable to section 186, is not applicable to government company in production of defense. Or a government company other than listed, they taken approval from the Ministry of Central Government. For this, section 186 not applicable. So we see in the rules, 5 points in the rules. Section 11 will come up on the initial stage. 1, subsection 1, 2 layers and exception. 2, that condition more than 60% and the more than 100%. 3, limit exceeds, special resolution is required. Subsection 4, disclosure, and then in notice also special resolutions information is required. Then the 5 subsection 5 board resolution, unanimous board resolution. Then loan is subsisting prior approval from the PFI. Subsection 6, in case of a company registered under section 12 of the SEBI Act, then the limit is specified. Subsection 7, in case of interest lower than the interest. 8, in case of default in repayment deposit accepted or interest. 9, maintain register. 10, books register should be at registered office, open for inspection, extract copy, that thing. Then contravention mentioned in 13, penalty for a company 25k to 5 lakh, officer in default 25k to 100k, not 100k, not 1k, 100k, up to 2 years imprisonment. 11, section not applicable. Loans go for the purpose of loans, guarantee, security in case of banking, housing finance, insurance company. Acquisition, NBFC, principal business itself, acquisition shares allotted for a banking, housing loan, ordinary course of business, for the acquisition also not applicable. Rules we see for a wholly owned subsidiary company, SR is not required, and the register form MBP2 preserved, manual electronic fees. Then we see restriction on number of layers, more than 2 not applicable. Then company in excess of specify under rule, file registrar disclosure details within 150 days from the publication of these rules in official gazette. Then contravention, then we seen again this is special not applicable with regard to the government company, production defense, government company other than the listed approval of Ministry of Central Government is obtained. Thank you.